January usually sets the tone for the year, but January 2026, it sent a mixed message for the GTA real estate market. More listings, fewer sales, and prices still adjusting, plus some serious winter weather that threw a wrench into buyers' activity. So what's really going on behind the headlines, and what does it mean if you're planning to make a move this year? Let's break it down. Welcome back to Behind the Numbers. I'm Steve Ialongo, a real estate broker that has been helping people buy and sell real estate in the Greater Toronto Area for over a decade. If you're thinking of making a move or just curious about the real estate market, this is a show for you. All right, let's get into it. We'll start with available properties because this is where the story truly begins. In January, the GTA had 17,975 active listings. That's 970 more homes than December, and an increase of 4.76% compared to the same time last year. Translation, sellers are stepping back into the market, inventory is starting to build, and buyers are starting to have even more choice. Now, let's talk about sales. And this is where things really cooled off. There were 3,082 homes sold in January. That's 697 fewer sales than December, and a 19.88% drop compared to January of last year. At first glance, that looks concerning, but context matters, and we'll come back to that in a minute. Next up, average sale price. The average home sold for $973,289 in January. That's down 3.3% compared to December and down 6.5% compared to January of last year. This tells us prices are still adjusting. This is the lowest we've seen the average sale price dip in over 5 years. We're not seeing panic, but we are seeing realism. So when you put this all together, January 2026 paints a clear but nuanced picture for the GTA real estate market. Inventory is rising, sales slowed significantly, and price continues to soften. But a big part of last month's slowdown had nothing to do with confidence and everything to do with conditions. We had 3 major snowstorms in January, which absolutely had a negative effect on showings, foot traffic, and overall market activity. When buyers can't get out, deals can't get done. On the financial side, the overnight lending rate was held for the 3rd consecutive time at 2.25%, which brings some much-needed stability to borrowing costs. That pause gives buyers and sellers a clearer framework to make decisions moving forward. Bottom line, January wasn't weak. It was weather impacted and traditional. With more inventory on the market and interest rates holding steady, the stage is set for a more active spring. And if you're thinking about moving, selling, or just want to understand how these numbers affect your situation, that's exactly what we do here at Behind the Numbers. If you found this helpful, hit like, subscribe, and I'll see you on the next update.